Hello and welcome to OBI's Manchester City Centre office market update. Having analysed recent take-up, we'll be providing you with a review of occupational demand and analysis of key trends in the market. We'll also look at supply levels in the city, in addition to providing an overview of the investment market. Total take-up for the first half of the year equated to just under 465,000 square feet across 133 transactions. Despite some political uncertainty, Manchester's occupational market remains resilient. The largest transaction recorded during the first 6 months saw WeWork commit to 55,000 square feet at No. 1 Spinningfields. Seeking to capitalise on the dynamic and fast-growing tech market, new design-led flexible workspace which provides high-quality occupier amenities and with a collaborative culture have emerged.
Manchester's market has seen the TMT sector as the strongest performing in the city. The sector is thriving and Manchester's tech cluster has been responsible for bringing in £78 million worth of investment in the first half of this year alone. Businesses on the peripheries of Manchester look to relocate into the city in order to attract the level of talent they require. Access to finance is ever improving with key institutions such as GP Bullhound, North Edge Capital and Barclays supporting the tech community with investment and financial advice. The key challenge for tech businesses is to predict growth levels once capital has been raised. Subsequently, a number of Manchester's landlords are looking to create ecosystems in order to facilitate growth.
5 deals have been concluded at rents of £30 per square foot or above, compared to 8 transactions during the whole of 2016, and headline rents are currently at £33.50 per square foot. OBI anticipate that £35 per square foot will be achieved by the end of the year. The central business district remains the area of the city witnessing the highest levels of demand, with 122,000 square foot transacted across 39 deals. The largest of which saw OBI acquire 22,000 square foot for rental cars at 42 to 44 Fountain Street. The Department for Work and Pensions' long-awaited deal at No. 2 St Peter's Square completed in July, and with other large acquisitions expected to be concluded in new Grade A accommodation during the second half of 2017, the supply pipeline remains tight. Approximately 515,000 square foot of Grade A space is ready and available, which includes 106,000 square foot at No. 8 First Street and 33,000 square foot at No. 1 Spinningfields. This equates to approximately 1.5 years' supply. However, with some large Grade A requirements due to commit in the next 6 to 9 months and inward investor relocations on the horizon, we believe there could be an undersupply of Grade A space before the next phase of new build developments are delivered. 4 new builds will commence on site before the end of 2017 at 125 Deansgate, Landmark, 2 New Bailey Square and 11 York Street. With delivery approximately 2 years away, the strong pipeline of refurbished buildings will offer large occupiers an alternative to new builds. Barbarolli, Dalton Place, Core, Bridgewater House, Bonded Warehouse and the Express Building, with developers opting to deliver a variety of M&E solutions targeted at different sectors of the market. A number of buildings being refurbished, including 11 Portland Street, Union and Canada House, have been able to secure occupiers in advance of their completion, illustrating the lack of immediately available accommodation able to satisfy large requirements of over 10,000 square foot.
The fundamentals of Manchester continue to attract investors as the occupational market isn't dominated by any particular sector and there is a depth and resilience to the demand from occupiers. Manchester also has the benefit of strong leadership, world-class universities providing a highly skilled workforce, and the city has invested in infrastructure projects that will support the predicted growth of the city and the local economy. The appetite from investors for assets within Manchester has seen prime office yields remain at circa 5%, and our sale of 80 Mosley Street at the turn of this year demonstrates that Grade A office refurbishments with WALTs of between 3 to 5 years are achieving circa 5.05%.
Landlords are going to have to become increasingly agile in relation to their disposal strategies. Those willing to embrace the fast-growing tech scene and seek to develop long-term relationships with these rapidly expanding businesses will stand the best chance of capitalising on this active area of the market. There are some significant transactions under offer to occupiers such as ETC Venues, Arm Holdings and the Parliamentary Health Service Ombudsman, so we expect the second half of the year to build on the momentum of quarters 1 and 2. with year-end take-up expected to exceed 1 million square foot. We hope that this snapshot into the city centre market has been of interest. OBI have a significant amount of detailed research on Manchester city centre, and should you wish to discuss this in any further detail, please don't hesitate to get in touch.